If we want to truly make the most out of diving into the world of cryptocurrencies, we've got to be smart about it, right? That's where profit taking comes in. It's all about locking in those gains by selling some or all of our crypto when it's riding high. Now, I get it. Those numbers might look like magic, but they're just numbers until we turn them into real money. And how do we do that? By selling our crypto for cold hard cash or a stablecoin and moving it to our wallets. Simple, right? But here's the deal. Most of us jump into the crypto adventure without a solid profit-taking plan. No worries, we're in this together. Welcome back to the Finance Homefront. I'm Bev, and today we will explore different profit-taking strategies, understand the profit-taking process in crypto, be aware of essential precautions when taking profits, and gather helpful tips to simplify the process. Stick around until the end to discover a clever way to bypass the conventional process and instantly access our crypto gains if needed. Just a quick heads up before we dive into the nitty-gritty. The info I'm about to share is all about insights, not some official financial, legal, or tax advice. Remember, trading crypto can be a roller coaster, and there are risks involved. No promises on specific outcomes, okay? If you're enjoying the ride and want to be a part of this awesome community, do me a solid. Hit that like button, subscribe if you haven't already, and ring that notification bell. Why? Because it helps our little corner of the internet grow so we can keep bringing you top-notch content. Now, let's dive in. As crypto investors, having accounts with multiple reputable exchanges is crucial, especially when aiming to take profits in hot markets. The more options we have for buying, selling, and exchanging cryptocurrencies, the better. Now let's talk about risk. Crypto investors should have a high tolerance because we're navigating new, speculative technology in an emerging digital asset class. Regulatory uncertainty adds an extra layer of complexity. Keep in mind, never invest more than you can afford to lose. Mentally prepare for the possibility of losing all your crypto investments. It's the reality of this Wild West. Once we acknowledge the risks and realities of investing in crypto, we can explore two primary investment and profit-taking strategies: short-term and long-term positions. Let's begin with short-term strategies and their corresponding profit-taking plans. A short-term strategy in crypto is akin to rolling the dice at a casino, a high-risk gamble with potential fast profits, though experienced by very few. However, the downside is significant. It can be stressful, demanding more time and effort. Capital gains tax applies to any profits earned. And there's the risk of keeping funds on an exchange susceptible to outages, hacks, or frozen funds. Also, in high-volume situations, orders for short-term strategies might go unfilled. Alright, so short-term gains. These are three strategies that you can use. Aim for the gain. Set a goal, like a percentage gain, and sell everything once you hit it. Sales schedule. Plan to sell bits at different price points. And then there's the house money move. Take back your initial investment when your crypto doubles and let the rest ride. Mix and match these strategies like a crypto playlist. Start with house money and switch to sales schedule after securing your initial stash. But remember, short-term moves mean more ups and downs, so watch out for potential losses. You might switch from aiming for gains to limiting your losses. Sell everything if the price drops a lot. Now, long-term investment strategies and corresponding profit-taking plans. When we talk about buying and holding for the long term, we mean planning to hold for at least a full year, ideally aiming for a 2 to 5 year time frame or longer. As a long-term investor, it's crucial to be mindful of getting too attached to our investments and avoid selling, which could prevent us from locking in potential life-changing gains and enriching our lives and our families. For long-term investors, the first step in crafting a profit-taking plan is deciding how to use potential life-changing gains. This could involve paying off debts, buying a new car, acquiring a house, or diversifying into other investments like real estate or stocks. Once you've established your goals, the next step is to implement a strategy for dollar cost averaging, or DCA, out of the market over time. For instance, if you've accumulated Bitcoin at various price points over the years, ranging from $1,000 to $60,000, with a plan to hold for several more years, you need to get comfortable with the idea of taking profits during significant upward price swings. These profits can then be directed toward your predetermined goals or used for other necessities. With a long-term investment strategy, you can also apply the aim for the gain and sales schedule strategies over an extended period. However, it's crucial never to leave any crypto on an exchange for an extended duration. Transfer any crypto you're accumulating to the long term to cold storage hardware wallets like Ledger devices for secure storage. When it comes to navigating the world of cryptocurrency investments, the approach to profit-taking strategies depends on various factors unique to each investor. Long-term positions often involve less effort and mental strain, with many investors finding financial success in a relatively short period due to the volatile nature of crypto prices in its early stages. However, choosing the right profit-taking strategy is a highly individual decision, shaped by factors such as age, life stage, responsibilities, risk tolerance, technical expertise, and financial capacity. In implementing profit-taking strategies, there are 5 key considerations that investors should keep in mind. Firstly, practicing transaction fees beforehand is essential to prepare for transaction fees associated with moving crypto around, especially when dealing with smaller amounts. Secondly, understanding the networks and wallets supporting different cryptocurrencies is important, considering their synchronization speeds and confirmation requirements. Thirdly, for smooth interactions with traditional banks, having multiple accounts and notifying them in advance of significant crypto activities is advisable. Fourthly, caution is advised when dealing with stablecoins like USDC and USDT, which may not be entirely decentralized, potentially leading to fund freezes over certain circumstances. Finally, when dealing with exchanges, it's crucial to diversify accounts across reputable platforms and reach their highest verification levels to mitigate issues like outages, delayed crediting, and suspension of withdrawals during times of market volatility. Additionally, it's important to be aware of the potential impact of regulatory actions on crypto projects, as this could lead to delisting of certain cryptocurrencies, limiting selling options. Overall, having a well-thought-out profit-taking strategy that aligns with individual circumstances is key to navigating the dynamic landscape of crypto investments. Now, I've got a cool tip for you. Ever heard of crypto debit cards? Yep, they're like magic cards that turn your crypto gains into instant spending power. Check this out. Coinbase has a Visa debit card that lets you use your cash or crypto for everyday purchases. Plus, you even earn more crypto while you're at it. Awesome. We've covered a lot today about profit-taking strategies and the millionaire game plan. Whether you're into short-term gambles or long-term gains, having a clear plan is key. Now, here's a question for you. What's your go-to profit-taking strategy? And do you have any questions or tips to share? Comment down below. If you've enjoyed riding into the crypto world with me, make sure to show some love. Hit that like button, subscribe if you haven't already, and don't forget to ring that notification bell. Your support keeps us going, and we've got more exciting content coming your way. Stay tuned.